We start off with a touch of magic. Shares of Disney soaring more than 7% today after the company announced its new streaming service surpassed 10 million signups in just one day. That news adding more than $18 billion in market cap to the entertainment giant today alone. And get this, since Disney announced pricing for Disney Plus back in April, it's gained more than $58 billion in value. So doing the magical math, $58 billion in market cap, 10 million subscribers, that makes each Disney Plus user worth about $6,000. So is this Disney magic too good to be true? Guy.
That's one way to do the math. I mean, I think the market is saying it's going to be far more than 10 million at a certain point. So that's 6,000. I guess their hope is at some point it's $60. If you do that math, that's probably their ultimate hope. With that said, I mean, here's a stock today that traded about 6 times normal volume, made an all-time high. It's up 50%-ish since that day they announced legalized gambling when the stock was meandering around $99. To me, that was the first lifeline. This is the second one. Again, it comes down to this. Can you wrap your head around the valuation? I understand Karen and I spoke about it last night. They're spending money to make money, and I get it. How long does that take, and how long are you willing to wait? And how long should you stick around after a 50% move over the last, 6 or 7 months? I say probably not a bad time to take profits in the name.
We did this magical math because the exercise at this point for investors who've seen this ride up is how much is priced in for a business which we don't know it's going to pay off yet. It's a money hole right now, in hopes that in the future it will pay off.
Right. It's a money hole, but it's a money hole funded by someone with a lot of content and a ton of money.
Sure.
Right? So if anyone is going to be able to compete, it will be Disney. So I think, we said at the top of the show about how much has already been priced in, a lot. This move today, I mean, it was trading 137 before they announced this number. $11 in Disney is an extraordinary move, right? So it would be hard to say, oh, now's the moment. You've got to get in. I feel like this really is a buy the rumors, sell the news. Last night we got a little lucky because there was that glitch and people thought, oh, the launch didn't go smoothly. That's a complete sideshow non-event. Here, wow, that's a lot of good stuff already priced in. I mean, I think good for them for being really aggressive, getting this out there. They've done an extraordinary job with the launch. But that's a
this is like
really
a perfect stock for a Karen barometer. When you feel like it's overpriced, you have to. Are you going to get a bigger multiple in Disney for this? Do you ever get your head around that?
I think you will, but maybe you need a little more. I think.
Why?
Why do you need a little more?
Yeah, why a little more? They're in the game. They don't have to win the game. They just have to be in the game. It's already there. Streaming is there for them now.
Okay, streaming's there for them. The costs are all there. I mean, look, I believe that it's going to work. But so by your theory, then, you would pay any price.
Right.
No, not any price.
So
a higher
price.
multiple than the existing multiple that's been put on Disney.
What's the multiple you pay for? What is the multiple that is 60 to 90 million by fiscal 2024, which is their goal?
For me, that has to be calculated. The market will tell you what it is, and technically it has to hold that 130 mark. We're way above that right now. I wouldn't be a buyer today.
That's what I'm saying. Today, would you be a buyer?
But I wouldn't be a buyer.
$11?
I wouldn't be a buyer because I don't believe the multiple. I wouldn't be a buyer because the move has been so big, so you get a little reversion. But I think it goes much higher than where it is.
You're
right
not
now.
too far apart.
We're not.
No.
We talked about this
stretched, by the way.
The valuation feels stretched.
Yeah, that's what you're saying, right, Karen?
Just for the moment, Rob. This
$11 move in a single day, and the rest of
the old Disney.
Right. And this is a new. I know what you're saying. The streaming, and the other thing is they do have content. To your point, Karen. I mean, this is something where they're not having to pay for all of this content like everybody else. Yes, they're going to have their original content, but think of the content they've already got with Marvel and Pixar and all the rest of it. And then the bundle package with Hulu and all that. There's a lot of reasons to be excited, and I understand the excitement. And I think it's a FOMO deal where these guys all are jumping in today, and that's one of those things that we see happen all the time, Mel, where suddenly the stock's up $11 on this. Really? I mean, this was a known. This was something that we all had some perception of how it would go. Now, many of these, I would say, the majority of these subscribers, the 10 million, are free. So
Verizon
that's something that's going to have to absolutely play out over time, right? Where do they stay when they have to pay? That's the real number.
Right, of course. Yeah. But I mean, I think embedded in this whole discussion also is if Netflix is valued at X, should Disney pick up some of that valuation of Netflix because of the road that it's on? And so therefore, when you say the valuation seems stretched right now, are we not allowing it to expand because it should expand because it's in this streaming business.
No, I think that's fair. I mean, Karen's got a view on this. Listen, Netflix also has a 7-year head start, and apparently, at least what you look at, a pretty sticky user base. Now, again, I don't know how sticky it's going to be in the years to come, but till now, it's been pretty good, and you still have that international growth. So I think Disney would love to be a Netflix at some point, but the runway to get there is, it's not next week. It's probably more like 5 to 7 years from now. So in terms of that valuation, it doesn't happen overnight. So at 25 times, which is where it's trading now, that's historically extraordinarily expensive, understanding that they have this new revenue.
It's got to happen. But also, you know what else has to happen? Apple has to get a multiple
Wait, hold on. Back up.
Yeah.
Why do you say it's got to happen?
Why?
I mean, I understand that you believe that it will happen.
You're giving an unrealistic
happen?
multiple on. I'm not saying it has to get a Netflix multiple, but it has to get a larger multiple than Disney's core business has been given. In all the history of Disney trading, it has to get a higher multiple than that. No one would argue that, right?
Well, okay, so the projections by Disney is 60 to 90 million subscribers by fiscal 2024, which is approximately 4 years from now. How many Netflix subscribers are there in the United States right now? 60 million subscribers.
Right.
So in that many years, should Disney have the Netflix valuation?
Well, I don't know is the short answer, but I think the streaming business is changing, right? Mm-hmm. So I think that I think they could end up with more than that. But I think it's also an issue of cost as well. It's not just how many subscribers, right? It's what does it cost, and also what other costs of Disney. What do they? Disney owns ABC TV. That's not where you want to be right now.
Right.
On the flip side, though, Disney doesn't need to get a Netflix multiple. Netflix multiple might need to come down.
And Netflix is the pure play.
Yes.
But Netflix is the pure play. So Netflix has one way of earning income. Disney has multiple ways of earning income. So I'm not saying a doubling of the multiple, but there's got to be some increase. And if you say there's not an increase in multiple deserved, I think that you're not being honest.
But you can see that there should be a downgrade of multiple in a stock like Netflix.
100%.
Okay, so it's going to meet in the middle somewhere.
Yes.